for a second, I want to turn my attention to the economy, which will also benefit from a successful vaccine rollout, to be honest. We look at the macro data which comes out and the high frequency indicators really, which come out at the end of every month. And the data for the month of December, the last month of 2020, seems pretty promising. The GST numbers have been good. The PMI numbers came out today, and they have been also in the positive territory. So are we looking at us moving onto the road to recovery? Are we on track for 2021? I will be speaking with Dr. Pronab Sen on that in just a minute from now. But first, let's go across to my colleague Poonam, who is taking us through all of that macro data.
Well, in fact, if you look at the economic recovery, it is looking good so far in the month of December, but the recovery is still patchy, or I would say uneven across sectors. Look at the December GST collections at a 21-month high, up nearly around 12% on a YOY basis. Bank credit growth also is slowly and gradually inching up to pre-COVID levels. For the period ended 18th of December, bank credit growth was up 6.1%. It was up by a 6.1% even in the month of February. Daily e-way bill generation is still holding up well at nearly around 2 million units for the month of December. December trade deficit also, it widened to 11-month high, especially on account of the imports. And if you look at the imports breakup, well, the industry-led imports was supported by growth in chemical products as well as base metals. Capital goods has picked up month on month, but it still remains muted on a YOY basis, thus suggesting that the investment demand is yet to pick up. Air passenger traffic has held up well so far in November. Manufacturing PMI also has stood up well above the 50 level mark for a fifth straight month. What is yet to pick up is the core sector data, which did contract yet at 2.6% for the month of November. And also, if you look at the overall recovery, well, the auto sales data is looking good on the PVs as well as the two-wheeler data so far. CVs is yet to meaningfully pick up. So I would say the recovery is good so far in the month of December. It is still slightly uneven across sectors.
As we kick off the new calendar year, the same concerns and challenges persist, but the data seems to be steadily improving, and that's what the December data shows as well. Are we truly on the road to recovery? Are we kickstarting the new year in a positive way? To speak more on this, I'm joined now by Dr. Pronab Sen, former member of the Planning Commission. Dr. Sen, thank you so much for speaking with us here on ET Now. Just first to get a sense from you on what you make on the December data. GST numbers have improved steadily and they continue to do so. People are pretty happy about that. Your PMI indices are looking good. Do you think that the worst is now truly over and we can say that we're heading in the right direction in 2021?
I don't think we're there yet. The December figures have come in much better than I had expected, and this is really a very good thing. But that should not lead us into complacency, because what it seems to be suggesting, so let's take the numbers one by one that you talked about. The by and large, the December figures are reasonably strong. But there are a few things that you should worry about a bit. You know, GST collections up sounds like a very good thing, but not necessarily so. Because think of the kind of analysis that people have had, which is that the non-corporate sector has done much worse than the corporate. So what you could be seeing, and this, by the way, we saw after the demonetization as well, is that demand is shifting from the non-corporate sales to corporate sales. And since corporates are much better at GST compliance, you know, what you could be seeing is an upsurge, not because activity has gone up necessarily, but those who are more GST compliant have gained at the expense of those who have lost. So, you know, one could make that kind of an argument, but by and large, the figures look better. But the reason why I say that we shouldn't get complacent about it is that however you cut it, if you look at the first 2 quarters data, we don't even go into the third quarter, we have a situation where the economy has lost roughly about 18 lakh crores. of which about 5 lakh crores is reduction in government taxation, and 13 lakh crores is from your and my pocket. Right? Now, to believe that we collectively as the consumers of India are going to increase our consumption by 13 lakh crore equivalent by drawing down our savings, I think that would be taking optimism far too much ahead. So we need to be a little careful. This 13 lakh crore loss that we have suffered is going to play itself out, and that we have to be very conscious of. Now, when it will play out is really the question. I had expected it to start immediately after the festival season, right? Which means by the end of November, the decline should have started. So the December numbers have come actually as a very pleasant surprise, but it's a surprise nevertheless. But as an economist, I am trained to be a pessimist, and I always look at the worst side of things. That's what economists are for. An optimistic economist is completely useless. And so I am waiting for the shoe to drop. It hasn't happened in December, good thing. It could happen in January, it could happen in February, we don't know.
No, so how would you explain then your high frequency indicators, or I would say what companies are reporting? So auto sales, for example, your real estate sales, for example, all of your major FMCG companies. Is this pointing to a faster return in consumption? And of course, that big hole that we have to fill with what happened earlier last year is a different story. But are we looking at a faster recovery of consumption? Because most individual companies are reporting coming back to pre-COVID levels.
No, this is true, particularly, as I said, that the information that we get are from corporates. And the corporates may actually be doing very well. But the point is that 85% of our people are employed in the non-corporate sector. So if you look at FMCG sales, motor car sales and real estate are really both rich man's games. So if we are doing okay, that's a good thing for us, but not necessarily a very good thing for the economy. FMCG sales are more interesting. And if you look at what the FMCG companies are saying, it's their rural sales which have shown buoyancy. Urban sales continue to be down. And it's urban India which was really badly hit with the lockdown. It wasn't rural India. So we need to be careful with this.
What do you see the impact of the vaccine rollout being? I mean, we're bang in the middle of all of the vaccine news. And for most part of last year, everyone was saying that once the vaccine is here, everything will change. Your economy will open up as before. People will be more confident of moving and working, etc. Do you see the vaccine at this stage being a game changer in that sense?
For a large part of the economy, which are the services which have to do with person-to-person contact, those are going to be in the doldrums till the vaccine comes. And that's not a small part of the economy. This is your hotels and restaurants and personal services of various kinds where you cannot avoid person-to-person interaction. Vaccine will be a total game changer for them. But so far as those activities which can be at arm's length, manufacturing, a lot of services, agriculture certainly, those I don't think are going to be impacted significantly by vaccines. What will change very significantly will be expenditure patterns. Because now we are not being able to spend on certain, things like going on holidays, eating at restaurants, all of which are a fairly large chunk of our expenditure budgets. Those have been held back and we are spending on other things. But those are going to come back, and those are all fairly employment intensive sectors because these are services delivered by people. And so for them, it's going to be a huge, huge improvement. But the point is that, much depends upon the manner in which the rollout happens. So what little I have heard from the government suggests that that's not going to happen till the middle of the year of 21, because the initial stages you're going to be essentially vaccinating only the frontline workers. And they're not the ones who are large consumers of the kind of services that we are talking about.
So, where do you see the weak spots now? It seems like rural India is doing better than expected. In urban India, your middle class and upwards consumers are back on track, consuming a huge amounts if you go by what Swiggy and Zomato, etc., reported in the last week of December. Just, as an example. So which are the weak spots you see in the economy right now and the vulnerable sort of sections and areas?
As I said, the vulnerable sections are those services which require person-to-person interaction. Though that's why Swiggy and Zomato are doing well. I mean, people are not being able to go to restaurants, they're not being able to go on holidays, they're not able to have parties, so they're ordering in. So it's a switch of consumption, right? The question that we need to ask ourselves, which of these activities generate more employment? Because ultimately it's all about employment and income generation, which then feeds into future consumption.
Do you think there is enough confidence right now for private investment to return? Because that really has been one big lacuna. Will that be the important indicator to look at going forward?
That is my single biggest worry. No, at the moment, we don't have any indicators other than some of the IPOs that have come in a booming stock market, because today risk capital is really very, very cheap because of the stock market boom. So you are seeing IPOs coming in, but looking at those doesn't give me the confidence that these are going to be investments which would have the same kind of multiplier effect, because a lot of them are not actually, construction intensive or machinery intensive. None of that is happening. And my fear is that what is going to happen is that a lot of potential investors are going to remain on a wait and watch mode until they see credible signs of the economy really turning around before they step in. Now, this could take a while. And my fear is that next financial year, you may see a couple of root shocks essentially coming from the investment side. The consumption side may pick up by then, but the investment side may still stay very, very subdued.
So in that context, what do you think should happen in the budget this year? Is the budget going to be even more crucial, the first one coming after a pandemic year?
You see, the budget should actually be working on improving confidence. What investors are looking for, particularly investors who are putting in their money into investments which have long payback periods, is sufficient confidence in the government that it will shore up the economy, whatever it takes. I think that message needs to come through very clearly. Just talking about it, the government has talked about it, but the point is talking about it doesn't carry the same kind of conviction that budget numbers do.